Hello traders, The title of the video is Australia, New Zealand FX Technical Trader shed lights onto FX trading. Australia, New Zealand FX Technical Trader shed lights onto FX trading. Let's get started. The currency pair that we are about to analyze today is the Australian dollar, New Zealand dollar currency pair, and we are on the monthly chart. All right. So there is a huge competition between the Australian dollar and the New Zealand dollar. All right. So whenever we are trading the Australian dollar, New Zealand dollar, we are comparing two economies. All right. One economy is the Australian dollar. The second one is New Zealand dollar. New Zealand dollar mostly based on oil, and Australian dollar mostly based on gold. All right. So whenever you hear the word Australian dollar, think of gold. All right. So looking at these charts, it's very interesting currency pair, by the way, but it's quite challenging to trade this currency pair. All right. Quite volatile. So for new traders, I do not recommend this currency pair to new traders. All right. That can be quite challenging to trade. So I put two vertical lines on my charts. You can see that the Australian dollar, New Zealand dollar was going down here. What is the meaning of that? All right. Now in this session is consolidating here. But before that, we know, though we don't have enough data here, that it was going up before. So it went up first. So we can say from 2008 to 2011, the Australian dollar, New Zealand dollar was going up. And from 2011 to 2000, let's say up to now, it is going down, okay? So when the Australian dollar, New Zealand dollar is going down, it means that the Australian dollar is appreciating while it's appreciating against the New Zealand dollar. So what is the meaning of that, all right? We want to know. When the Australian dollar, New Zealand dollar is going down, okay, now the point, there's a correction here, traders. When the Australian dollar, New Zealand dollar is going down, it means that the New Zealand dollar is appreciating against the Australian dollar. That's the correction. New Zealand dollar appreciating against the Australian dollar. The Australian dollar, New Zealand dollar will be going down. Australian dollar, okay, New Zealand dollar is going up. The Australian dollar is appreciating against the New Zealand dollar. So what is the meaning of that? So when this currency pair is going up, it means that, okay, the economy of the Australian economy is doing better. There's more trust in the Australian dollar in comparison to the New Zealand dollar. So asking investor, where should you put your money now? Will you put it in Australia or will you put it in New Zealand? They'll say, we will prefer to put it in Australia. So another meaning to that is that when the Australian dollar, New Zealand dollar is going up, it means that will you buy the Australian dollar or will you sell it, all right, in comparison to the New Zealand dollar. So when you have, for instance, the Australian dollar and the New Zealand dollar, which one will you prefer to buy, sir? As a smart investor, at that point in time, people were buying the Australian dollar, okay? And then, for one reason or another, people start selling the Australian dollar and were buying the New Zealand dollar. So from 2011 to 2000, we can say from 2011 up to now, people prefer to buy the New Zealand dollar instead of buying the Australian dollar. So they were buying the New Zealand dollar. People are more willing to invest in New Zealand to buy the New Zealand dollar. Therefore, the New Zealand dollar was appreciating against the Australian dollar. So it was going down. But technically speaking, you may say to me, Joe, get to the point, Australia, New Zealand, FX technical trader. Where is the technical analysis? Here it is, my friend. Okay? So, looking at the current market pattern, we have a consolidation, talking about technical analysis, technical trader, between the 111.82, 111.82, and a level of 103.50. The price is now oscillating between those two key levels, we have a balanced market, a consolidation right here after a down move. So after a volatile price action, we have a low volatility period in a consolidation. This is about market profile where the market pattern is changing from a bearish channel to horizontal. Looking at the current market pattern, we can see that there is an equal demand to buy the Australian dollar to the New Zealand dollar. So people are talking about the consolidation now. What is happening here? What is the sentiment? So if I give somebody now the Australian dollar and the New Zealand dollar, what would they do? All right. There is a balance of sentiment. People are equally willing to buy the Australian dollar like they want to buy the New Zealand dollar. So we have what we call the balanced market. There is no more trend as such. But talking about the technical analysis, we have the media line of that channel at 10746. So anytime we have a channel, we want to know what is the media line. That media line is at 10746. So for a technical trader, what I've been saying to traders before is that the price structure will determine the appropriate strategy that we must deploy. Now, some traders already understand that, but I need to clarify that a bit. If we are in a declining channel, that declining channel will determine the strategy that we must deploy. If we are in a rising channel, we must deploy bullish trading strategy. If you are in a declining channel, we must give priority to bearish trading strategy. If you are in a horizontal channel, we must deploy equal bullish and bearish strategy. So what is happening now after all the blah blah blah? Technical days swing trader want to buy near the level of 10350. So priority to bullish signal above 10350. If the price start going now from 10350, pay attention to the median line because that's where professional will take their first profit. As you can see here, as the price start going out from that level, it came near the median line, people took profit. It pulled back again to the same level. It went back to the same median line, and that's where people are taking the first profit. Now they took profit again. If they start buying here again and start going now, where will they take the first profit? Again, near the median line. But their first intention is to buy near the low and to take the big profit at the top of the consolidation. But as the price going now from the lower part of the consolidation to the upper level, if it's near the median line, people want to secure their trade. And if it breaks above the median line, retests and finds support, then they will push it up to the top. Near the level of 11182, 11182, professionals are willing to sell in this zone. So whenever the Australian dollar is appreciating against the New Zealand dollar, and it comes near this level of 11182, they want to sell the Australian dollar and buy instead, the New Zealand dollar. So anytime the Australian dollar is 1 New Zealand dollar, 111, people are selling the Australian dollar. At any time, the Australian dollar is 1 New Zealand dollar 03, people say, no, it can't be. It should be more than that. And they want to start buying it. This is what's going on now. This is a balanced market here. So as a day trader, as a swing trader, you want to look for bullish trading setup near the 10350 and also above the median line. Break above, retest, looking for higher lows and higher high. So as it's going from the low, so you want to understand in the consolidation, you need to understand what is the price doing. Is it going up? If it's going up, pay attention to the higher lows and higher high and trade on the edge. If it's going down, pay attention to the lower lows and lower high and trade on the edge. So if it start going down from here, people are more willing to sell it down. If it's starting from here to the upper side, people are more willing to buy it, the Australian dollar. Okay? So this is what's happening now. Also pay attention to the price structure For area wave traders, understand also, here it is, you see here, minimum price move is free. This will be excellent tool for you in a consolidation because it's not going to go too far. Here it is, 1, 2, 3, when a little bit below it, and then bounce up. All right, those are area wave traders. You see, they push it fast because they say 1, 2, 3 in a consolidation. Woo! Followed by a bullish candlestick pattern. This is a bullish engulfment. See, there was a bearish candle followed by a bullish candlestick bar that went above the median line of the range of that bearish candlestick bar. This is what we call a bullish engulfment at the lower part of the consolidation. You can use candles, you can combine candlestick pattern, all right, with the consolidation. But a lot of traders do not do that. Do you know that? A lot of traders do not do that. They don't combine the candlestick pattern with the consolidation. Here it is. This is a bearish engulfment. But whenever you see a long candlestick bar like this, be careful. I explained this at Day Pro Traders YouTube channel where I'm busy talking about candlestick pattern. You want to look for candlestick pattern on the upper, bearish candlestick pattern at the top of the consolidation, bullish candlestick pattern on the lower part of the consolidation. Then you will implement what? A different time frame trading method. If the signal fail, you just come out of the trade. All right? Okay, so talking about Australia and New Zealand dollar, FX technical trader shed light onto FX trading. We want to understand because we are technical traders, we are trading currency, we do not want to know too much. All we do care about is the price structure and our technical indicators, all right? But I'll go a little bit deeper. We want to understand why people are buying, why people are selling, why we have the bullish chart pattern, so we can understand the fear that is propelling the market. I'm going to say something very important today that can maybe will help you to improve your FX trading. There are two groups of market participants in the market. So I said this before. Wanting traders, especially new traders, are not doing. They don't want to know who are trading a specific currency pair. So this currency pair, the Australian dollar, New Zealand dollar currency pair, a lot of traders that are trading crude oil will keep their left-hand side eye on this currency pair. They also watch the USD card. They are paying attention to currency pair. Though they are trading crude oil, they will be monitoring the Australian dollar, New Zealand dollar. They will be monitoring the USD card. This is about knowing who is trading this currency pair. Those who are trading also crude oil may use this currency pair for their hedging activities to protect their crude oil positions. They will also use the USD card. So that's why sometimes those who are the purest Forex traders do not know what's going on. Why suddenly we have this beautiful, gorgeous, all right, trading setup, okay, but the price went down. There are hedging activities in the financial market, okay. That's why you want to know what is happening, all right. 1 second, please. So, as I was explaining to you at the beginning of this video, I said to you from 2008 to 2011, the Australian dollar, New Zealand dollar was going up. Why? Because the Federal Reserve was devaluing the dollar. They were cutting interest rate, which means money was coming out of United States where the interest rate was too low. Savers are not happy to put their money in the United States because they don't earn anything at all on their deposits. So therefore, they move their money, the money management, all right, the wealth managers, transfer wealth out of the United States to other parts of the world when the interest rate was higher. All right? When the Federal Reserve was cutting interest rate from 2008, God knows 2009, in fact, it started big time up to 2012. But another thing that was happening, you may say, what has got to do with the Australian dollar, New Zealand dollar? Yes, there's something to do with it because I told you that whenever you hear the word Australian dollar, think of what? Gold. So because when the Federal Reserve is devaluing the dollar, people will buy gold because the money becomes worthless, so to speak. The money is losing its value. So when they are cutting interest rate non-stop, there is inflation, risk of inflation going up. and the money lose its value. Dollar going down, no value. You can't buy anything from outside. It become too expensive if you want to buy. If you're an American during that time, you want to buy in London or other part of the world, it may become too expensive for you. So people prefer to buy gold. So those who do not want to move their wealth out of the United States to other part of the world may buy gold, okay, as a hedging tool for their, okay, wealth. All right. So because the Federal Reserve from 2008 to 2012, in fact, was devaluing the yen, was doing what we call quantitative easing. All right. A lot of people were buying gold, which is good for the Australian dollar. So the Australian dollar became very, very strong. You see, people prefer. So if you told somebody from 2008 to 2009 that to understand the financial market, will you buy the Australian dollar or the New Zealand dollar? They will say, no, 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 I will prefer the Australian dollar. And then they may say, why? Because gold is likely to go up, and Australia has a lot of gold. All right, so that's why this currency pair was going nicely. So will you agree with me that it would be nice to know a little bit more about how the Federal Reserve monetary policy can help, okay, a forex trader? Will you agree that it would be nice to read and to understand that the decisions that are made by the Federal Reserve, though even if you hate the Americans or even if you are not an American, it wouldn't be good to know what's going on, all right, talking about the Federal Reserve. So that's why the Australian dollar, New Zealand dollar was going up. So for a forex trader or a currency trader, that by paying attention to the Federal Reserve, okay, policy, you can have a bit of idea what is likely to happen in the long term. So you may say in the long term, or at least in the medium term from the medium term to the long term, the Australian dollar from 2008 to 2012 has a more chance to go up. So you will buy the Australian dollar instead of the New Zealand dollar. But in 2012, the Federal Reserve started saying something else. So instead of putting up interest rates, instead of reversing the policy straight away, they start giving warning. So for the market, a warning, when the Federal Reserve start giving warning, it means that they're going to do it. So the Federal Reserve was telling people, okay, soon, you remember the election in 2012, Mr. Obama. So after the election, the American election cycle, the Federal Reserve, after 2012, they start saying that, okay, now we have done enough. In fact, the interest rate was quite low. They have no more space as such to cut interest rate, not much. So you can't go below zero, all right? So they were saying to people that soon we will stop that policy of devaluing the dollar. We will stop cutting interest rate, and they start talking about it all the time, which is a type of market manipulation to a certain degree. You can quote me on that, all right? And then you can see here that the Australian dollar start going down. Also people start selling Australian dollar. They say, oh, the Federal Reserve is about to change their policy. So we should come out of gold. We should start coming out of the Australian dollar. As people were start coming out of gold, gold was going down. The Australian dollar started losing its appreciation against the New Zealand dollar. That's why we have this cycle here. So the market was anticipating that the Federal Reserve will start putting up interest rate, which they start doing now. In 2016, they just put up interest rate to 0.75. It's still low, but they put it up. So that's why it went down. So now we see a balanced market. So it went up, it went down because people were expecting the Federal Reserve to put up interest rate. But because it already went up, now the Federal Reserve start putting up interest rates. What should we do? It's consolidating here. That's what's going on now. Now the price is oscillating between the 11182 and the level of 10350. So as the Federal Reserve is putting up interest rate now, that will put a bit of pressure, okay, on the Australian dollar, because all the money that went to Australia will start going back home. The American money that went to Australia will start returning home, which means that this currency pair, talking about from the medium term to the long term, it has more chance to stack in a consolidation like this as we are seeing it now. So be aware that we have the consolidation between 11182 and also and 10350. But I understand that just now there is a smaller consolidation taking place now between the lower part of the consolidation and the median line. So possible consolidation between 11182 and 10350. Another possible consolidation may take place between the median line 10746 and the lower part of the consolidation, at 10350. Are you getting it now? Are you getting it, my friend? All right. So as a technical trader, so talking about Australia, New Zealand, dollar FX technical trader, shed light onto FX trading. All right. Shedding a light on it. All right. So you understand what's going on, why it's going up, why it's going down, what is likely to happen in the medium term and also the long-term term, so you can make loads of money or making an excellent decision instead of just assuming that now we see a bullish chart pattern, bearish chart pattern, but understand the fuel that is propelling the market. We are likely to see a consolidation in place for some time before a trend may start again, because you see there was a trend before, another bearish trend down. Now we are consolidating because of the change of Federal Reserve policy. All right. If you go now, so we understand. So talking about two groups of market participants, there are fundamental traders that go why, that's focused on why. They want to know the reason why. Technical traders are looking at the price structure. So there are two groups: fundamental traders and technical traders. All right, very, very important. All right, but the best approach is to combine the fundamental analysis and the technical analysis. The middle way. Have I speaking to somebody? The middle way. This is we want you to be here in the middle. Combining the technical and the fundamental. All right. So you understand what is happening, fundamentally speaking, and as a technical trader, you will make excellent decisions. Because as a technical trader, you know how to time the market, you know how to read the price structure. Now, if you can combine a little bit, your technical analysis with fundamental. So at this point in time, you see in this session here, you will understand why the price has more chance to go down. So therefore, you will be concentrating on your bearish trading setup on the edge. And before that, you will be concentrating on your bullish trading setup. Let other crazy traders sell it, and you want a pullback. You are waiting for your pullback because you know that the policy is still in place. Here you will be waiting for your rally because the policy is helping this currency pair to go down. Now the policy is helping this currency to consolidate. Will that be helpful for a day trader or a swing trader? Will that be helpful for a position trader? So now we have all this line on our chart, but anytime we change time frame, we must draw channel. So I was on a monthly chart analyzing the Australian dollar, New Zealand dollar. Anytime you change your time frame, do exactly the same thing. Ask yourself, what is the current market pattern on the hourly time frame? The current market pattern on the hourly time frame, here it is. It's again a mini consolidation. Can you see that? It's a fractal pattern, a fractal consolidation happening again on the hourly time frame. Because the bigger fractal pattern, the bigger pattern on the monthly chart will dictate itself on the lower time frame. So this is the time to trade consolidation. If you like to trade consolidation, this is a very nice currency pair to trade, on the hourly time frame. Consolidation, daily chart, consolidation. It's going on all over the place, and you want to use different time frame. Anytime you change your time frame, draw your trend line for the daily chart. You see here? Here it is. I need to mention this one here. You see? There is a bearish trend line here. Okay? Let's color it now into pink so you can see why it's so important to know where are the key level, resistance, and trend line. You see? We are now on the edge of that pink trend line on the daily chart. So you may say to me, George, I'm a scalper. I don't care about your daily chart. Here it is. A line that we have drawn on daily chart may be useful to us on the 5-minute time frame. The price, if form is high, will hit this level and come down again. All right? Use different time frames. All right? 3-minute time frame, you can still see that pink trend line. Okay, here it is. Another line that we have drawn a higher time frame. They are all here on the 3-minute time frame, and we can make decision along those. Okay, here it was. Okay, can you see the channel on the edge of the channel? We have an inverted head and shoulder chart pattern, a messy one, but finally it breaks the bogey on another higher low. And even on the 3-minute time frame, we can draw a trend line, and that's where people are buying. Where? On the edge. If you have any question or suggestion, put in the comment section, and in due course, I will be recording another video to answer your specific question. All right. We are the TSTW 24 traders talking about Australia, New Zealand, FX technical trader, shed light onto FX trading. Happy trading to you all, and speak to you soon.